Good morning, everybody. Hey, welcome to Wednesday, the last day of April. Hope you're doing well. We've got some economic numbers coming out today we'll talk about and more when Dave joins us here in just a few minutes. Before we do, let's not forget there are so many things that are out of our control. I want you to know you can control the amount of risk you have in your portfolio. That's why I developed the core retirement design. Give me a call, 863-382-0037. Schedule your core retirement analysis. Hey, with that, we got Dave coming up next.
Services offered through Second Half Financial Partners, LLC, an SEC-registered investment advisor. The opinions voiced and information provided in this material are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual. To determine which investments are appropriate for you, please consult with a financial advisor. Second Half Financial Partners, LLC does not provide tax or legal advice. Please consult your tax or legal advisor regarding your particular situation. And here we go. Time to check in on your money and find out how Wall Street is treating you today. Spoiler alert, it may not be pretty, but yesterday was. Let's check in with Phillip Statler from Statler Financial Services in downtown Sebring and see how he's doing today. Phillip, how's life today so far?
Hey, it is nice to be able to say that we put together, I think, five in a row green days on the S&P 500. I think you got to go back to November of last year to find that many days of green. So
Yeah,
that was good
I think it
news.
was actually 6 days in a row, but yeah, everything was green yesterday. The Dow was up by 0.75%, up 300 points. The Standard and Poor's, I think that's six in a row for the Standard and Poor's, and it's five in a row for the Dow, if memory serves. That was up 0.5%, up 32, and Nasdaq gained 95 points. And I'm kind of looking at gold and saying, that's been kind of the refuge thing, the stable point. It actually backed off a little bit yesterday from its highs, which kind of indicates, at least for yesterday, folks felt pretty good about equities as an investment, right?
They did. Yesterday was, they found more reasons to buy than to sell yesterday. Let's put it that way, which was good. Now the question is again, can we, the economic news is not promising today. Let me just put it that way.
You're being very, very charitable. This is government data dump day. In addition to all of the other junk going on, with all the earnings reports out, the government starts flooding us with information. First one doesn't come from the government each employment week. It comes from the ADP, the payroll service, the big payroll service that gets a pretty good finger as to what private sector hiring looks like. And they say last month, better bring out my foghorn. We were expecting 128,000, according to one of my people, in terms of new jobs expected to be added. ADP says we only added 62, a miss by over 50%. That started out as bad news to begin with. I think you would agree.
Yes, definitely. Yeah, just that one coming out first at 8:15 was just a precursor of more bad news to come, as you would say. So we've got less than half of new jobs than expected, and that was way off the March number of 147,000.
Yeah, March was a pleasant surprise on the private sector hiring, and it definitely was not in April. So then we turn around and we say, well, let's see if the economy as a whole is doing okay in the face of all the upset and herky-jerkies on policy on the tariffs. And the straight response to how's the economy doing overall? First time we've actually dropped the gross domestic product for 3 years. They expected it to be modestly up during the quarter, and our first look at it says we actually fell by 0.3%. That's actually a precipitous drop in the gross domestic product, and I got to believe investors are not in the least bit happy with that, Phillip.
No, they're not. And when that hit the board, you saw the futures really start to drop, and they continue to move in that direction this morning, getting worse as we get closer to the open.
Yeah, actually, I was surprised when you told me that we were down like 200 points. I was saying, well, that was right at the time the data came out. I was fully expecting off of a 0.3% drop in the gross domestic product. I expected something like 1,000-point drop immediately. So we might actually be a little bit more circumspect in our reaction than I honestly expected.
Well, let's not get too excited there, Dave. We have continually increased that red ink
Ah,
since that 837 mark.
I would not want to be right in guessing that was happening. I was just pleasantly surprised that it wasn't a media drop. We're going to get some other information as time goes on, too, this morning. It hasn't come across either of our tickers quite yet, but we're also going to get the personal consumption expenditures inflation number. Remember, that's the number that Jay Powell of the Federal Reserve says he watches the most carefully. And so far, I really would rather not go 0 for 3 on our big market moving data, would you?
I would not, but hey, let me just that information actually just it's not going to come out till 10 o'clock this morning, Dave, which is
Oh, 10
unusual.
o'clock.
Yeah,
That is
so
different. Stuff like that generally is at 8:30 on the
at
nose.
8:30, yeah.
So well,
But
we got kicked in the knees, kicked in the shins. Now we're going to get kicked someplace else, maybe at 10:30 this morning. This has the harbinger of not being a particularly great day so far, right?
it is not. We are definitely looking at, I mean, I guess let's just say that if the PCE number came in as a surprise, some of this could get reversed, right? If that was good news, then we might see some let up on the red ink on the futures.
Absolutely. You got to keep in mind that a lot of the people that are investing in growth stocks, even though it might not be the best macroeconomic policy, they're hoping for an excuse to give the Federal Reserve a reason to look at lowering interest rates. Not to mention all the jawboning President Trump is doing on the interest rate level. So a taming of the PCE inflation would definitely give us a big boost, especially on growth stocks, I'd imagine.
Absolutely would, Dave. And so we'll wait and see what happens at 10 o'clock, but there could be a movement in the market based on those numbers.
Absolutely. I did not see the number, but I understand yesterday we got the consumer confidence study, and that wasn't particularly hopeful news either. It plunged for the fifth straight month as we started worrying about jobs, tariffs, and whether or not Amazon is going to publish how much the tariffs are costing us.
Yeah, it did drop a little bit. It came in at 86 versus 87.3 expected, but down from 93 that it was in March. The JOLTS report came out as
Hmm.
well, and it was kind of disappointing. It said we got 7.2 million job openings compared to 7.5 million that was expected.
I'm not 100% sure, given what the Federal Reserve's goal is to try to match up employment and unemployment. I'm kind of wondering whether or not that might actually be considered good news if we're getting closer to matching job openings and the number of people looking for jobs.
Could be, but we're definitely not showing up in the markets that way.
True. They're looking for any excuse to buy, but sometimes you just can't find them. And we aren't necessarily finding them on the reports we're getting either. How on earth can Starbucks stink the place up again? They're in the middle of a turnaround.
Well, maybe that's the problem. Is the turnaround's running slower than they expected it to be to run at this point. They are they missed their earnings number by about 8 cents a share. Came in at 41 cents a share. Revenue missed as well. So just not going well for Starbucks this morning when the open comes. They're down getting close to 10% right now.
Woo, that's not going to help one tiny little bit. Bunch of other household names coming out, both during the day today, at the end of the day yesterday, and after the close. What else have we got in terms of trending off of the publicly reported companies?
So we've got a another kind of in that line restaurant number. Yum Brands reported as well, and they adjusted earnings came in at $1.30, so they beat by a penny a share there, but they missed on their revenue number, and so Yum Brands is down 1.8% this morning before we get going. So that's you need to be on target here to get going in the right direction.
Absolutely. I just saw a top line headline on the thing that Yum Brands had been off on one of their metrics, and they said the only headline I had was that Taco Bell did well. I wonder which other ones of their labels did worse because they were pleasantly surprised by Taco Bell. Evidently, somebody else fell way short inside of that company.
Must have been. So, hey, on
Hmm.
the travel side of things, Booking Holdings, the old Priceline,
Hmm.
reported, and They reported like $2,481 a share. Get this, that's a pretty
Mhm.
good beat. They were expected $17.33. So a nice beat on that side, a nice beat on revenue as well. So that was some good news there. Not helping in them a lot in the stock price. They're up about 0.4%. I think that they have some expectations that travel is going to be flat going forward because of tariffs and just the whole economic output right now, Dave.
They probably were a candidate where they should have pulled guidance instead of expecting it, right?
Yeah, exactly. So, hey, on the other front, we had Caterpillar,
Yep.
big industrial firm. They reported they missed on earnings by about 10 cents a share, came in at 4.25 a share, missed on revenue as well. But yet they're up this morning so far, up about 1.5%. Um, Despite the tariffs, despite those type of things, the management's reaffirming their full year revenue and operating profit. So,
Now that for Caterpillar surprises me.
yeah, that's one of those things you wouldn't necessarily expect at this point. I was trying to find just some winners anywhere, Dave, and it looks like maybe, just maybe,
Hmm.
Humana came in okay. They uh, they beat on earnings. Revenue didn't really show up in this report, but it must have been okay, Dave, because they're up 5.25. It's about the
Well, that's good.
only
That's
green
a
I've been able to find.
Well, it's at very least some good news. Tidbits on the economic front and whatnot. We're still doing that weird dance. You know, the way birds, when they start a mating dance, they kind of dance around each other and don't touch each other. China and the U.S. are doing that as well. We've got a list of electronic items that we're exempting from tariffs for junk coming in from China. Earlier this morning, China listed a batch of stuff that are going to be exempt from tariffs that we send to them. So, no, we're not negotiating with China. We're just doing kind of a birdie dance ahead of the negotiations that really aren't taking place, if you ask both, right?
That's right. Absolutely, Dave.
Like I said, it's like watching a couple of cranes in a mating dance. You know, it looks like they're fighting, but yeah, they're really just planning on doing something interesting. And China's now doing their side of that dance. Summarizing it all, yesterday was generally a pretty good day. I'm looking at my delayed futures, though, and I'm not liking the least of what I'm seeing here. Up to the minute, how are we doing 45 minutes before the market opens up? And please try not to cry.
It's not a pretty sight, Dave. Just not pretty. The Dow right now is down $346. Getting close to 0.9%. S&P 500 down 1.33%. That's $75. The Nasdaq 100 is trying to get to 2%. It's 1.85 right now, but that's $363. And the big ones, Russell 2000 is down 1.75% right now. So not
Ouch.
a pretty day going into the open this morning. On the other side, we've got a lot of red as well. Silver down 2.2%, gold's down to 0.75%, crude oil back below 60, down almost 1.5%, $59.56 a barrel right now.
Well, to take that bit of good news, I found a production report out of OPEC Plus. It's actually good news why the price of oil is going down. They've increased production in the OPEC countries, so consequently, it actually is the supply glut that's bringing us down. Going overseas, looking across the pond, the Asian Rim market on balance was positive. One mainland Chinese market was up by 0.5%, the other down by about 0.25%, giving us absolutely no direction, but on balance we had green ink overall. European markets are kind of negative this morning in spots, but there's a couple of bright spots making the average European future pretty much flat this morning. One of the two measurements is down by 0.14%. The other one's up by 0.18%. So we got no direction whatsoever ever in Europe. Call it flat. 45 minutes before the open, though, we're not very happy at what we're looking at this side of the pond. And if that scares you about your retirement futures, well, maybe you need some help. How do I get a hold of you to stabilize my plans?
Dave, that's why I developed the core retirement design to help people design that retirement they always dreamed of. They can give us a call at 863-382-0037 to schedule their core retirement analysis. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk, 7:30 a.m. and 95.3 FM.
And we'll cross our fingers on some good inflation news we can talk about tomorrow morning. Fair enough?
Fair enough, buddy. Have a great day, and I will see you on May Day.
I appreciate you. It's 105.7 Light FM and Statler Financial Services. Phillip Statler.
Hey, folks, again, I want to thank you for joining us as we close out April, get ready to head into May. Hopefully, we'll have some better news ahead. Stay tuned. Be with us again tomorrow. Bye.